Okay, so let's get cracking. Today's webinar will be on our SPY short and also our financial short trade for the last couple of days. Now, you'll forgive me. So right now, I'm actually working off of a lap now. So you'll see me switching back and forth from my Fidelity platform here to my actual DMA platform to monitor some of the trades that I have going on right now. Just to make sure I don't take it up the ass in some of these things. So, quick disclaimer here, guys, for the profanity used in this webinar. I do tend to use a lot of colorful language. So, if that's not your cup of tea or you're at work, I would suggest maybe getting some headphones or, I don't know, leaving this webinar altogether. Quick plugs here before we get started. We are running a couple specials on our chat room. We do have a public chat room. It's $1 for the first 14 days, so that lets you just kind of, get a good idea of how we run things in our chat room. It basically just changes the way our members trade, many of whom were able to take advantage of the gains I had this week, which obviously we're discussing in today's webinar. This is the easiest way for you guys to get plugged into what we do. So again, that's $1 for the first 14 days. You guys will all receive links to in your question box for all of those. Monday we have another webinar. We have another webinar 4:30. It's going to be on choosing the correct strike price and expiration date. So we're going to talk briefly about the ability to accurately select these two components. The right strike price and the right expiration. Depending on what kind of move you're looking to get out of a certain stock. And lastly, we are actually going to introduce a new class, and it's really going to be more for the basics, more for prepping you for the advanced class that we do have. So it's going to be more on, the basics of learning options versus the tape reading stuff that we do in our advanced class. Okay, so let's go ahead and get into some trades. Now, the past couple of days, obviously, you guys have seen the market reverse quite substantially, and we got a pretty big sell-off. We got a very 2-day big sell-off. From highs here on the indexes. If you're looking at the SPY, a little bit over 153. And then we got to move all the way down to 150 on the SPYs, which basically happened pretty quickly. It happened for the last couple hours of the Wednesday session, and then the morning hours of Thursday session. So you had a real short time frame to capitalize on this move. And a lot of the big trades that I have, they take place over these very short time frames. And the reason why I want to start off with this is because, guys, smart money knows damn well everybody's looking for this trade. I mean, look at this. You got 2 months of rallying here, and they know everybody's looking for the short trade. So everybody is looking for that top right there. And again, they're not going to make it easy. So oftentimes they just use a catalyst that maybe doesn't even mean anything, and then they just take that as an excuse to sell off, and then all the major news wires say that's the reason why we sold off. So obviously this time around it was the FOMC minutes. Now, guys, they talked about stopping QE3 weeks ago, guys. They talked about it a month ago. They talked about stopping it, and then they came back out and said, no, we're gonna keep it unlimited. All right. And then, again, they're coming back out and saying we're going to stop it. So in reality, news is bullshit, guys. It is bullshit, especially on a short-term basis. So for a lot of you guys that ask me, like, okay, how did you figure this out? Was it because of the FOMC? Was it because of these fundamentals? You guys all throw out these fundamentals. That stuff doesn't mean shit, guys. It doesn't mean shit. And the sooner you realize it, the sooner you can start understanding what actually matters, and that is price action. That is price action. At the end of the day, it is all about price action. Okay? So, quick disclaimer here. It wasn't actually that I found the top of this stuff. Guys, I've been plugging away short this whole move up here. Okay? I was plugging away short, I think, right here. I think I shorted right. I definitely shorted heavy right here. And I took a big loser on the SPY right here. I shorted here as well. I think I shorted a couple days ago. But all throughout this, is that if you understand price action to the point where you can capitalize on both sides of the trade, like, yeah, I was taking losers on the shorts, but there were still unbelievable longs out there. You know, you still had Google smoking to new highs. So this thing would put, great moves in on the upside. Priceline as well. This thing put in great moves on the upside, that one day in particular. By the way, this day, there was a $2 weekly option that went to freaking $32, so there was still plenty of money to be made on the long side. This Amazon was pretty crazy going up into the earnings, and then after there was a couple trades here and there. This Netflix obviously has been absolutely bananas, and then of course look at the banks. Look at the banks. Look at this Goldman Sachs. This Goldman Sachs was ridiculous. All right. So I hit plenty of longs while I was testing out my short trades. Okay. Namely, so that actually this Bank of America pop over 12. This one was a very good trade. A lot of us caught this as well. So it's not about you just catching the top and just understanding where to, where the markets are going to reverse. It's about testing. Okay, we call these feeler trades. All right, we do a lot of these feeler trades, and we teach a lot about it in our classes because the feelers, for example. Let's say I'm taking a look at this Netflix, right? I'm taking a look at this Netflix, and I want to short this Netflix. So I take a look at this 180 put. And for me, like a feeler size is like one contract. But in this case, I got like 20. So this got a little out of hand. But usually all you want to do is just plug around with one contract in a, in a Netflix put or whatever it is that you're looking at. And you just kind of feel it out. You feel it out. And you start watching the tape for clues that, okay, it's a sell or a buy. All right. And then, if you do start seeing some selling that you like, if you do start seeing some aggressive activity, then go ahead and launch out some more contracts, 10, 20, 30. But be ready to bail on that position very quickly. So, all I'm doing is taking small losers, trying to figure out where that inevitable drop is going to be. Okay? That's all I'm doing. That's essentially all I'm doing. So I might take 10 or 12 losers to figure out where that top is going to happen. Okay? Has nothing to do with fundamentals. Has nothing to do with any of that crap. It has everything to do with price action. Okay? So now let's talk about this in detail. Now I was short coming in off the, I was short a little bit coming in off the open, and I chose the 152.5 strike for the weekly, and I also chose the March 1st weekly for next week, the 152. And I was sweating it out through all of this right here. And I figured, and I had an idea, because again, I've been in this game for quite often, and I know they were looking for that catalyst. And it just kind of felt interesting off the morning, that sell-off. And more so than anything, it was the sell-offs that I saw in Goldman Sachs and a lot of the other banks that were kind of getting me to believe in the possibility of the short trade. So even though you're looking at a tape on a particular stock, you have to look at your sector as well. You have to look at all your sectors as well to analyze, okay, if it's a broad market move. Like I'm looking for a broad market reversal. So that means everything that I'm looking at has to start selling off as well. So let's take a look at this, the other sectors. Let's take a look at this Google. Let's take a look at what she did. So notice right off the open, she sold pretty heavy right off the open. This was even prior to the FOMC minutes. So I saw weakness across all sectors prior to those FOMC minutes. So that got me to at least start my position. Now, let me pull up charts of all of these options. Now, let's take a look at the 152 weekly. Okay, now this is only today's or Wednesday's action and Thursday's action. So this is a screenshot from yesterday for the last couple of days. So now this is all me buying, 50 cents, 50 cents, 50 cents. And my average cost here was about 50 cents for about 1,000 contracts. I spread out across several different put options. So I had this one as well. So this is the next week's 152. And my cost here was, as you can see right before 2 o'clock, was around 70 cents, 77 cents, 75 cents, but, possibly even up to 80 cents. Okay? FOMC minutes came up. We got that huge spike up. Okay, now all of you day traders here that are really, actively looking at all these stocks, you guys knew, you guys saw how ridiculous it was. So you can't really tell right here. Let's see if we can zoom on it and see what happens. It doesn't look like we're getting too much of a good picture. Let's see if I can get a closer picture. So let's go to the last 5 days here, and we'll take out the pre-market. Okay. So, this is this was FOMC minutes right here. Let's take a look at the SPY, obviously. quickly. Okay, so here we go. FOMC minutes here. I was looking for a drop to that new low. And as soon as I got that low, remember, none of this has happened yet. So I'm sitting here before the FOMC minutes came out. I had a good 100K in leverage, maybe 125. And then if I got new lows right here, that's it. That's when I was going to plug away at the rest of it. Now, obviously, there was a lot of tape involved in this, but I am not going to show you guys the tape part of it because, again, that is all exclusive to the people who do take our classes, and that's real stuff that again, it's very complicated too, you know, and for me to go through all that kind of stuff, it would take us hours as well. All right, so tape reading is a whole different story. Now, we plugged away at the lows here. Once we hit the lows, I got real excited, and I started buying more, but then all of a sudden, there was that one last shakeout, okay? There was that one huge spike up where they brought the market up like 4 or 5 handles. It was absolutely ridiculous. So I saw my P&L go from up $35,000 to down, actually it was up $20,000 to down 35 grand right here. And I had 152.80 as a hard stop, guys. I had 152.80 as a hard stop. But more so, and the reason, this was the clinch, this was the real reason why I didn't sell. And the real reason why tape is so important. When you scroll through your other sectors and you take a look at what other stocks were doing at that same time, when that FOMC minutes came out and we rallied, if it was a real rally, you would see big spike ups on all the banks. Look at what Bank of America did. Nothing. Absolutely nothing. Take a look at what JPM did during this time. Nothing. Absolutely nothing. If you get just about any chart during that time, that after the FOMC minutes came out and after we made that spike up, we did nothing. No stock was very heavy on the buy side, and there was no aggressive buying across the board. So that's why I didn't panic right there. And boom, was able to see it through. Finally, she made new lows again, and that's when I just buried myself in further positions short, assuming that was going to be the big washout for the market as well as the financials. Now, the financials for me, those are the ones that have been bought up the most. So therefore, those are the ones that are obviously going to sell off the most. I mean, as you can see, this Goldman Sachs got plugged pretty badly. And we'll take a look at this option as well. So let's take a look at the GS weekly. Actually, this day was Friday. So this was actually a little premature. Let's look at the last 3 days. Okay, so I was buying this option, this 155 option, at about 50 cents, and then I averaged as soon as I realized, okay, you know, I had a real trade on my hand, you know, I averaged up to about 60 cents, 70 cents. And then boom, you know, you see what this thing did. This thing rips to 3.5 the next day. Guys, I got out half of it this day. You know, because again, you know, when you have that kind of leverage on, I still panic. You know what I mean? Like, you know, you got $250,000 leverage on, and you know, you're up X, Y, and Z dollars. So it does get a little bit scary sometimes, you know, and you do definitely, you know, a lot of times you cover prematurely. So in this case, I sold a lot of it at 90 cents. Next day we opened up, I was able to sell $182 and then up to $240. Now, take a look at what happened that same day. Option went to $5 guys. I mean, come on, I had 1,400 contracts from 50 cents, guys. 50 cents. So obviously, you know, these are the extremities here. I mean, you can sit there and dance with your mind all day and say, what if I did this? What if I did that? Obviously, I would have made $500,000 just on this Goldman Sachs. Plus, God knows how much money on the SPY puts, Citigroup puts, JPM puts. I had them all, guys. Now, the big one of the day, though, the big one of them all was this Bank of America. Now, Bank of America was just kind of chilling at around 4 or 5 cents. You know, before those FOMC minutes came out, probably, yeah, 7 or 8 cents. And this option actually went to 60 cents. So you can't see all of Thursday's action, but this option actually went to 60 cents. That's absurd. That is absurd. So there was a lot of big money here. There was a lot of big money if you were able to hold through the FOMC minutes. And that was really the clutch of it. That was really, you know, where things got dicey. So you had to have your position prior to the FOMC. And even if you didn't, you had to be quick enough. You had only seconds, sometimes, you know, maybe minutes here. Otherwise, you're paying up a little bit too much for it. And it's okay to pay up for things as long as you are correct in your move. You know, so that's what ended up happening. I had about, let's see, let's go back to this Goldman Sachs. I had about 1,400 contracts in Goldman Sachs. Average sell was like $1.50. you know, from 50 cents. So I ended up making a good, you know, 100 grand, I think, just on Goldman Sachs, and pulling down a lot of cash in the SPY puts as well. You take a look back at these SPY puts. You know, 50 cents all the way to 2.25. I had sells all the way up, and again, I had about 1,000 contracts of each one of these options. So this one, I had 1,000 contracts of, uh, and the one for two for next week, I also had 1,000 contracts of this as well. Obviously, this premium gain was not as much as the weekly because again, this is when you're starting to select expirations and strike prices. Your premium gains on the on expirations that are farther out, obviously they're going to be less than your premium gains on you know, options that are closer to expiration. You know, that's just how it is. So I tend to play a lot of the options that are close to expirations, you know, front months, weeklies, simply because of the premium gain and the fact that I can time these moves by watching the tape. Okay, and again, you know, for me, that tape does trump it all. That tape does end up trumping it all. All right. So questions, guys. Questions. Talk to me about questions. Obviously, you guys have been plugging away. I haven't answered any of these things. So let's open it up here to questions here. So, are these webinars going to be recorded? Yes, absolutely. What did you see before the sell-off? Did you see anything before the tape? Chris, I showed you the tape on, well, I didn't actually show you the tape, but I showed you the chart on Bank of America, Goldman Sachs, all of those other names that were just kind of doing nothing. So as soon as we rallied on that FOMC spike up, I knew it was bullshit. I knew it was bullshit, and I knew I still had my game. And as soon as we made new lows on the SPYs, that was it. That was all the confirmation I needed. We saw new lows in all the financials, all the tech stocks. It didn't matter what you were in. Everything sold off on a broad market move. And again, that was what I was looking for. Let's see. Greg is saying, when you were losing, would like to hear about cutting the loss and getting out. Yes, absolutely. That's a great question. So what would have happened if I tried to get out? Now, guys, if you're looking to, you know, do these kind of position sizes, these kind of ridiculous position sizes that I tend to get myself into, you have to be quick on the keys to get the hell out. You have to be quick on the keys to get the hell out if you're wrong. All right. But at the same time, you have to accept and stomach some of those losses. Like I was prepared to lose $50,000 on the trade. I was prepared to lose that. I was okay with losing that. If you can't accept that loss, or you can't accept X, Y, and Z loss, then there's no way you're going to be able to react correctly to what's going on, you know, right in front of you. Okay, because you haven't truly accepted it. So what's going to happen to you is that, holy shit, this thing's going to go against you. You're so deep in the position, you're going to freeze like a deer in the headlights. And you're not going to be able to get out of your position because you're so damn heavy, and you're going to just sit there and wait. Okay, so this happens to a lot of traders. It happens to me a lot too. And, you know, it takes a lot of discipline, patience, and experience to really just get over the hump on that and do what you're supposed to do. You know, and bail out on those losses. So now, since I was so deep in all these options, the liquidity, guys, is not that great. I mean, this Goldman Sachs, I could have buried, if I dumped 1,400 contracts of this Goldman Sachs option, there's no way I'm getting 50 cents. I'm getting 30 cents because I'm going to bury this thing myself. I'm going to bury it myself. And the market maker is going to see me coming a mile away. So he's going to pull back all his bids, and I'm going to have to sell to him way down. If you guys don't understand how market makers move their option spreads, again, that is stuff that we teach in our classes. A lot of advanced concepts. But again, this is stuff that you should know if you are going to get in the game as heavy as somebody like myself. Okay, so managing your losses, absolutely, guys. I mean, I was ready. I was there to hit the button and sell everything. You know, so I was prepared to take that loss. All right, so that's my answer to you. Bala was saying, did you buy before the FOMC minutes? Yes, absolutely. What was your exit plan? I already gave you that. Greg is saying, how did you derive 152.80? Okay, that's a good question. Let's go back to the SPY chart. You can see right here. I mean, you can see it right here. So we look at this, and you know, you see it right here. So you have this simple, you know, simple resistance here. So, you know, I think it was like 75 more like, but I always like to give it a little bit more on the upside. Chances are, if the SPY actually hit 152.80, I probably wouldn't have covered everything there. I would have covered on the range between 152.80 and 153. And that's why your losses are always going to be a little bit more than you expect, because when you have that much more in option size, like if you have thousands of contracts like I had, you can't just bail out at one, at one time. It doesn't work that. It's difficult to move in and out of large positions. Chung is saying, what system are you using? The options chart. This is all Fidelity, so these are downloads from Fidelity. Fidelity has updated charts for weekly options and all that kind of stuff. A lot of retail platforms I noticed don't have this because they don't want to pay for the data. It costs a lot of money to pay for the data, so a lot of platforms don't do it. Fernando was saying, what was your net gain after the losses you had feeling out the short over the previous weeks? Yeah, Fernando, great question. So I think I lost about I think it was about like 20, 22 on the losing side. Here was one of the bulk ones. I think I lost like 16 here. And then I'll lose like a couple grand, every single time that I try it. So you guys have to feel out like what's good for you. What is a good loser for you? And I say good loser because they are good losers. They're necessary, guys. They are very, very necessary. Most gurus out there will not talk about their losers. They won't even express to you guys, how much they do lose, or they won't showcase their losers. I gladly take these losers. I have to take these losers. If I don't take these losers, then I can't figure out if a move is real or not. I got to test out all of these things. This was a big one at 149.5 that I really thought we looked good for. I thought we were going to tank right here. And it never happened. It never happened. Everything just started to look like dip buying again, and then boom, before I knew it, they just ran that whole trade against me. So I took a big one here. I took a little bit one here, and then as soon as everything just kind of set up, all the tape just looked good, and then every single one of my other sectors was reacting to what the market was doing. Boom, I knew I had something right there, so I had to go for it. And, I put in a $250,000, and I came out with a $250,000. Let's see. Jackie's saying, isn't that too risky to have a position before FOMC? Yes, absolutely. Answer to that question is yes, unequivocally. If you are a newbie trader, you should not be holding anything before a big news event. You should not be holding a damn thing. Ozzy's saying, how many windows/screens do you use to keep tabs on everything? In my actual house, I usually trade. I got about 4 screens. Mike is saying, can you call out this type of trades in your chat room? Okay, so again, I'm going to actually hit up Mike on this one and tell you guys exactly why we're doing some of the things that we're doing. We don't do alerts anymore, guys. We again, when I was with Profitly, again, like that's what, the culture over there is to push out alerts. Personally, I don't think it's correct for me to do that when we're trading, weekly options, high risk things like this, because by the time you get your alert, you are going to get smoked. You're going to be buying when I'm going to be selling, and that's not fair. It's not fair to my subscribers. It doesn't make any sense. It makes 0 sense for me to do that. And it's you want to talk morals and ethics? It's wrong. It really is wrong. So we don't do that. We talk about it in our chat rooms. I talk about putting on my trades in my chat rooms. I talk about it in the mornings, and that's it. In our chat rooms, you are there to develop yourself as your own trader. We want you to be independent of me, of anybody else, okay? So if you're relying on somebody to send you alerts, to send you an email when you should do something, you are eventually going to get smoked. That's just the nature of this business. That's how this shit works, guys, okay? So we don't do that. We are in the business of building real traders. So if you want to take this for real, and you're going to be around for a while, and you want to understand how this shit works, then that's what we're here to do for you. And again, if you want alerts, we ain't the place for you. Let's see. Sandeep is saying, how do you decide how much lost profit is enough? That's very personal, man. That is very personal. And I don't mean personal by that I don't want to answer it. I'm saying personal to you. So, you might have a smaller threshold than somebody like myself. Me, I have a big stomach tolerance. So, if I lose 25 grand, I'm not I'm not stressing out about it. Okay, but again, like I have a larger account, and so you got to figure out where you're at in terms of your trading, and what you're willing to risk, and what you're willing to make. Let's see. Hearing the necessity option. Why use SPY options instead of ES? Fernando, but you could use both. I use the SPY option simply because it's more easy accessible. Like a lot of places, they don't have access to ES options. Plus, ES, with the ES, you do have to have a little bit more capital. So I think eventually, once I have a big enough account, I'm just going to move over to the ES instead of the SPYs, because obviously there's a lot more liquidity there. And let's go. Let's keep going here. When buying and selling in size like this, are you using limit orders or market orders? Great question. So Nico is asking when, so let's actually just post to my other platform here. Let's say I'm short this Netflix, right? And I want to get heavy in this thing. So what I'll do here, guys, and again, this is a little bit more advanced. You guys might not have these level 2s at your disposal. You guys might be on the retail platforms, and you're gonna queue up, on your web platform how much you want to buy, blah blah blah, all that kind of stuff. If you really want to trade all this stuff actively, you have to have a direct market access platform, guys. And again, if you don't know what that is, again, we teach it in our classes. Email us. We'll give you the whole spiel. But let's say I wanted to get heavy in this thing. All I got to do, and all I would do, let's say I wanted to get really aggressive, and I wanted like 500 contracts. I would just take 100, and I would bid over what the offer is. So I would bid at $1, right? So instead of limiting something, I would just bid way over $1 here. Hang on one second while I put this thing down. Okay, so in this case, and I'll shoot out an order here. I'll just bid over. This ensures me that I get whatever this offer is, and then anything in front of it. So if I wanted to be very aggressive with something, and I just wanted to sweep this whole offer and just take everything that was there and take everything after it, I would just take 100 and bid for $1. That would ensure me I get 94, 95, 96, 97, 98, 99, and $1. So that means I like what I'm seeing on the tape, and I just want to get aggressive on this. I just want to get in. So if I'm feeling like that, I'll use semi-market orders, obviously, to buy contracts, sell contracts, all that kind of nonsense. Let me look at this option here real quick. This is my Google. I'm short these options right now. They're looking kind of dicey. I'm also short these Netflix 185 calls. These look pretty good. Okay, so back to the questions here. So to answer that question, do I use limit orders or market orders? I use both. So limit on the upside, like let's say I'm in this, right? Let's say I'm in this with 30 contracts, and I like how it's moving. I'll take 10 contracts and just limit way out. So as this thing is moving down and this option is going higher, so they'll eventually take my limit at $2. I'll put a limit at 2. I'll put a limit at 210. I'll put a limit at 220. I don't give a shit. I'll just spread the whole thing out on the book, and then wait for these. If I really feel good about the position, and then wait for these limits to get hit. That's how oftentimes I'll try to piece out of big positions too. But you really do have to have experience on that side. Doesn't come easy. Let's see. What else? What other questions are going? Despite the 3 books that are required reading in your options course structure document, what other books would you recommend? This is a good question. Mr. Patel, I would tell you to throw all the other books in the trash. I would tell you to burn them all, because books ain't going to help you, bro. Books are not going to help you. This is going to help you. Being active about trading, putting on trades is going to help you. You guys know how I learned? I learned by losing money, all right? So, again, that's just the name of the biz. You got to get in there, and you got to get your hands dirty. Books are not going to help. Books are going to teach you about, a possible strategy. I mean, let's face it. Most of you guys out here, the ones that are in this chat room or in this webinar, you guys have all paid money to a lot of, let's say gurus who are advertising this is the best strategy in the freaking world, blah, blah, blah. We don't teach you a strategy. All right. What we do in our classes is teach you how this shit works, so you can build your own strategy. So eventually that you are independent, and you don't need me anymore, and you don't need anybody else, because you actually know what you're doing. All right, so that is the game for us. If you want, if you want a quick fix, or you want the best strategy in the world, you should go do iron condors or butterflies, or somebody that's pitching covered calls or penny stocks, whatever the hell it is. Then that's the reason why you would go to books. The reason why we have all the books that we recommended was because those aren't books that teach you about strategy. Those aren't books that teach you anything about strategy. Those are books that teach you about you, meaning psychology, and they're books that teach you about how this shit works. All right? That's it. That's all you want to read. If you were talking about trading books, the only thing you want to read is a psychology book, because once you understand a strategy, everything is all up to you. So, you are your own worst enemy in this whole game. So half of our class, is dedicated to a lot of psychology. Wow, Bank of America hit lows, huh? Holy shit. Maybe I should sell more of this. Hang on, guys. I'm going to sell more of this. All right. Let's see. Honestly, the HFT book has taught me more about how HFT works and given me ideas how to utilize it. Absolutely. Let's see. Do I use charts? Guys, I only use charts to give me a picture. I'm not like a chartist, and I don't use any technical indicators or any of that crap. Again, these are all adaptations. Guys, technical indicators were created to decipher what happens on your tape, guys. That's what they were created for. They were created to give you an idea of what the hell this means, all right? All of your technical indicators are some form of adaptation for you to understand what's going on here. So why don't you just cut through the bullshit and figure out what's going on here? How about that? Let's go. What else we got? What were the 3 books? 3 books, guys, was Dark Pools, HFT, Problem of HFT by Heimboldich, and Trading in the Zone. Let's see. Bruce is saying, why did I leave Profitly? No bad blood with Profitly at all. No bad blood with Sykes at all. None of that at all. It's just that we didn't want to do alerts. We didn't think it was fair to I didn't think it was fair to the subscribers. And if I'm sitting here focusing on trying to get a good trade for my subscribers, my own trading takes a back seat. And I can't have that happen. I'm out here trying to make millions from my own trading. That's what I'm out here to do. All this other stuff is side business. That's all this is. Greg is saying, given the size you play, can market makers fuck your stop levels? Greg, if you don't understand that your stop levels, they know where they are. Your market makers and the smart money knows exactly where your stop levels are. Whether you're playing options, whether you're playing equities, it doesn't matter. That's why all your stops get hit before the big moves get made. They shake you out, and then they make that big move. That's how the market works, bro. So if you haven't figured that out yet, then you're gonna have a tough time, bro. And that goes for the rest of you too. Stops, guys. Order flow is being sold, okay? Your retail order flow gets sold to funds, all right, to institutions. Most of you guys didn't know that, and that's legal. All right, guys, so that seems to I think that takes care of a lot of the questions here. Greg is saying, Lucci, what was the is there any audio in the trading room? We're actually going to work on that. So, I think the Benzinga guys over there, they're working on a lot of cool shit. So I think they're going to crank out a live trading one where you're actually, you might be able to hear us as well. I have my own private chat room, and then we have another one for, for all the other traders that want to come in. So, so we might, you'd be surprised. Benzinga's they're trying to come up with a lot of cool stuff. So let's kill it. Let's kill it right here. Give me a second here. I think I got to plug another couple things. Let's go back to this public chat just so you guys that came in a little bit late. Again, we do have a public chat room, $1 for the first 14 days, and again, it's just to get you in there, just to get you to see what kind of show we put on. Easiest way to get you plugged in. A lot of the guys there took advantage of a lot of the trades that I made this week, and also going forward. Obviously, Monday we have a new webinar. We do have a new webinar, and that's going to be on choosing the correct strike price and expiration date. Pretty basic stuff. Just talk briefly about how to pick the right strike price, the right expiration. And then we are going to introduce a new class. It's going to be a basic class that really gets you prepared for, the advanced class, all the tape reading stuff that we do in our advanced class. Okay, so I think the Benzinga guys are going to give you the details on those. And other than that, let's wrap it up and be back for our other webinars. And let me go ahead and babysit my rest of my positions for the weekend. Have a great weekend, guys. Have a great weekend. We'll see you soon.